The value of your 20s cannot be overstated. However, on the long road to old age, investing is a great method to accumulate cash and make plans for your future. It also is the main way to save for retirement. And it can also assist you in achieving many other financial goals as you go. Given this, it might be time to think about building your own financial portfolio if you're in your 20s or 30s. There's no guaranteed method to being wealthy, but here are some assets you may invest in instead of daydreaming about that 6 or 7-figure paycheck. Hello and welcome to Personal Finance Lab. Make sure you subscribe to the channel and that the notification bell is turned on, so you will be notified whenever we post a new video. Also, please give this video a big thumbs up and don't hesitate to leave a comment down below if you have any issues, questions, or comments about the video. Now, without further ado, let's get into the video. Number 1. Real estate. Real estate is a common example of a long-term investment, even though it costs a lot of money to get started. The commissions are relatively high and the profits are frequently obtained by investing in an asset over an extended period of time, rather than a short period of time. In traditional real estate investing, a property is purchased with the intention of eventually selling it for a profit, or being owned with the intention of receiving rent as a steady source of income. However, there are a number of additional, much more passive ways to invest in real estate. Nowadays, a lot of businesses provide the chance to invest in real estate with or without owning property, thanks to the development of fintech, or the use of technology to enhance and automate specific financial transactions and processes. By doing this, you can avoid any activities you might not want to engage in, such as owning or managing properties, while still getting exposure to these alternative investing opportunities. Number 2. Dividend stocks. Being in your 20s or 30s is an opportunity to take on risky ventures because you still have time to recoup if you lose your money at this point. Investing in stocks offers a fantastic way to put some of your money into a high-risk, high-reward business. Since dividend stocks are often those of financially sound and established businesses, their share values are less unstable than those of growth stocks. Young investors should start including dividend stocks in their portfolios because as long as the firms continue to perform well, they offer potential to receive income, no matter how little, regularly over a long period of time. You might have been able to accumulate more wealth on these stocks over a long period of time, say 10 years, than you would have on a savings account that pays interest. Number 3. Luxury items. Since they hold great resale value or even increase in value over time, fine jewelry, watches, and handbags are always wise investments. Luxury brands are also more resistant to pricing pressures and inflation, having strong profit margins, and can raise their prices because their wealthy patrons already anticipate it. If you have the means, investing in luxuries is a surefire method to make money. Number 4. NFTs. Non-fungible tokens or NFTs are a one-of-a-kind digital asset that will never be replaced. It is potentially possible for anyone to sell an NFT by generating the digital asset, minting the NFT on a blockchain, and offering it for sale on an NFT marketplace. Selling NFTs involves some upfront costs, such as a gas fee to cover the cost of the energy required to execute the transaction, and a fee for both selling and buying the NFT. You should not rely on this as a get-rich-quick strategy if you decide to accept the risk and invest in NFTs. And it'd be wise to establish a limit for how much you're ready to lose upfront. There are obviously safer investments out there, but if you're ready to take a chance, NFTs are a new and innovative investment that would be interesting to try. Number 5. Strong currencies. Diversifying your portfolio by making investments in foreign currencies can be very beneficial. Trading foreign currencies, also known as Forex, is a little more complicated than trading stocks, mutual funds, or bonding up your investment strategy. However, if this is an asset class you're interested in learning more about, mastering the fundamentals might provide you with a strong foundation to build on. As global economic instability has increased, interest in currency investing has risen significantly. In the past, only large corporations and wealthy individuals were allowed to trade currencies, but recently the market has been opened up to the smaller investor as well. By spreading your risk among multiple different currencies, you can take advantage of shifting macroeconomic conditions around the world. Because they have the ability to increase in value, currencies are similar to commodities and equities. You will make money if the value of your currencies increases in relation to the dollar. Number 6. Bonds. A bond is essentially a loan from an investor to a borrower. Like a business or the government, while the investor earns interest on their investment, the borrower utilizes the money to finance its activities. No one would lend money for free. Thus, the bond issuer pays an additional fee in the form of interest for utilizing the money. The bond's interest is paid according to a set timetable and a defined rate. Number 7. Bitcoin. The most well-known and prominent cryptocurrency in terms of market value is still Bitcoin. Despite its fluctuations reaching $21,000 in June 2022, despite worries about volatility, many still believe that the long-term price of Bitcoin could increase to $100,000 by the end of 2023. Bitcoin may be quickly and easily exchanged for cash or other assets such as gold with incredibly minimal fees. If you're seeking for a quick profit, Bitcoin is a fantastic investment option due to its high liquidity. Investors should be aware that the price of Bitcoin is extremely volatile and that buying them is essentially linked to gambling. Now is a very good time for you to buy Bitcoin because you may never catch Bitcoin at this price again. Number 8. Altcoins. Bitcoin continues to dominate the cryptocurrency market, but there are numerous other competing digital assets known as alternative coins or altcoins. Like Ether, which is utilized in Ethereum to pay transaction fees, many altcoins are employed within their own blockchains to accomplish something. And these altcoins have a better chance of surviving since they have uses. Investors have access to a wide range of alternative coins that serve various purposes in the cryptocurrency industry. Number 9. Art. If you have the money, purchasing art for your home can both enhance its visual appeal and, if done properly, prove to be a wise financial decision. Similar to stocks and bonds, the value of art can rise, and if a budding artist succeeds in their profession, the market value of their creation will rise. But before you start investing in art, you need to be aware of its limitations. Fine art is complicated, largely liquid, and requires a stable of knowledgeable partners in order to make wise investments. You also need to be aware of where to invest. Number 10. Precious metals. Precious metals investments have a number of advantages over stock investments, including the ability to act as an inflation hedge, intrinsic value, lack of credit risk, high level of liquidity, ability to diversify a portfolio, and convenience of purchase. They are easily accessible through market dealers, banks, and bullion brokers. In addition to being accessible, the market has a plentiful supply, so you need not worry about it running out. As long as you have the money, you can think about including a few to your investment portfolio. You'll also appreciate the range of choices. The most well-known and investment-friendly precious metal is gold. Its resilience, ability to take on different shapes, and capacity to conduct heat and electricity make it exceptional. It is primarily used to manufacture jewelry or as a form of cash. While it has some industrial uses in electronics and dentistry, if you want to experiment with different metals besides gold at a reasonable price, silver might be worth looking into. To sum up, accumulating wealth requires time, work, and attention, but continuing to learn and develop will help you adjust to change and make good long-term financial decisions that will ensure you reach your goal of becoming wealthy in your 30s. Please give us a thumbs up and subscribe, and feel free to comment with your thoughts on the assets we've suggested. Additionally, you may turn on our notifications to be the first to learn when we upload new videos. Goodbye.